Welcome back, my passive income investors. Today I'm breaking down my entire six-figure portfolio from start to finish. So let's jump right into this one, guys. Today I'm going to break down for you every single stock I own from start to finish, guys, and this is how I got into investing, and I think it's a crucial thing for everybody to try and gauge and learn from all kinds of people, not just me. You should take advice from everybody because your portfolio will probably be different than mine, and it's kind of whatever works best for you. So let's jump right into this with numero uno. We're going to start with the biggest companies first, guys. Let me grab my... drop that on the floor. But first of all, guys, I'm doing this all by memory. I believe every stock you purchase, if it is an individual company, it should be bought with intention and understanding and educating yourself on exactly what these companies are and how they work. Though I might not remember the ticker symbol exactly, I'm hoping I get them right, but I'm going to throw them all up on the screen for you as well. And we'll start with numero uno, the largest one in my position, guys, or one of the largest ones, is ticker symbol AAPL. I'm sure most of us own this if you already have a portfolio. Apple used to be the largest company in the world. It kind of dipped a little bit, and I think I'm going to start focusing on the tech sector part of my portfolio first. And Apple, I don't think I have to explain too much. World-renowned, loved company by everyone. Pays a little bit of a dividend, not a lot, but I'm holding it for growth. I think I have an average buy price right now on it somewhere around the 170 mark, I'm going to say off the top of my head. I still love it. I will continue to love this company, which leads me into my second stock I'm going to throw up here for you guys is, don't quote me on the ticker symbol, I usually screw Microsoft's up, but MSFT. Now, my intentions with Microsoft went in pretty humbled and understood, because I mean, I only wanted to buy something related to video games. If you look into like Activision and things like that, I really didn't want to buy into the video game makers, because what people play for games changes from time to time on a regular basis. It's a hard thing to gauge, but the system they play those games on, they don't really change. It's almost like an addiction, like you're either going to be playing on one system or another. And luckily, Windows over Apple actually owns one of the largest gaming systems in the world. PC, Windows, the number one thing used for online gaming, guys, and they also have Xbox and those things. And let's not even get started on their cloud business. All the other stuff that Microsoft is involved with is amazing. It is now reached to be the largest company in the US, guys, in the world. I think they've actually surpassed Apple. I have an average buy price on it right now sitting around $100. It was almost dead on 100, give or take maybe 20 or 30 cents. And these two companies make up most of the tech sector part of my portfolio, and they are two really waiting positions, really huge. They both pay a really healthy dividend, and I'm using them for forward-looking growth. The reason I have the tech sector part of my portfolio is I only plan on holding it for about 3 to 5 years, and if these companies don't increase dividends, I will be not selling them all, but scaling down in them to purchase higher dividend growth stocks. The last two parts of my tech sector aren't that important, and we'll start with the one we all know and love, which is Tesla, ticker symbol, I believe, TSLA, Tesla. And I do not own a lot of this. I own a little piece of it, and I'm holding it as a speculative play. And because it is a speculative play, I came in with an idea of what I was paying for it, and I have an idea of what I'm going to get out. I am going to hold this long term. This might be a position I don't touch for maybe 5-10 years. I really want to see what happens with this, and it's just something to make my portfolio a little more interesting and a little bit more, hyped up when it's fun looking at the news and being able to, pay attention to it. Because when you have skin in the game, you really pay attention. And with this company, there's just, it's unbelievable to watch what's going on with Elon Musk and all the insanity in between, which leads me on to my last tech stock, guys. Number 4 here for my tech sector, we're going to be looking at Facebook. And this is where I'm going to sound like a bit of an idiot, because we all know how Facebook makes money. If you don't, oh my goodness, you should not be buying it. Facebook makes money off its ads, $1 billion in revenue, low cost, like incredible structure to their balance sheet. They have probably the most world-renowned balance sheet currently ever. It's amazing when you look at it, guys. And the only reason I bought it, believe it or not, I don't like it because it doesn't pay a dividend, first of all, but I had, as I build up working for myself tax money, I have a hard time looking at a large sum of money just sitting around, so I like trying to put it to work. And I actually have all of my tax money for last year still currently sitting in Facebook. Am I an idiot? Absolutely. This is something I'm not going to do this year. Luckily, I'm not down a lot on the position because I bought Facebook for right around the 160 mark, and I've been holding it quite comfortably because it went down to the low 140s. It's kind of hovering between 140 and 150, and I'm really hoping they come out with good earnings, though if I do get kicked a little bit in the butt, I think I'm not going to be too happy about it, but luckily I have a good income, so I'll be able to make up for that, and the capital loss I will write off, and it'll just be a stupid decision I will slap myself for in the future. So that makes up all of my entire tech part of my portfolio, guys, and I really like the structure of this, other than the money I'm going to have to give back for what I owe for Facebook. But let's hope I can make a little bit off of it, because then I can keep some shares in it, as well as what I'm hoping for is the government's actually going to pay me to keep some shares. Again, really stupid. Don't do that. Don't try that at home, guys. Bad idea. And again, if you are enjoying this, you should slap a like on it and consider subscribing, because this is all by memory, guys, and we're only just getting started. So let's look at the next part of my portfolio. Well, actually, let's go to my least favorite part of my portfolio. We'll go right to the other spectrum. And not all of this is my least favorite, but we're going to talk about the real estate sector, or the REITs that I own. I don't own any direct REITs. I try and focus on real estate-based companies that aren't directly REITs, but are involved in real estate, starting with my least favorite of all time, guys, BRE, Brookfield Real Estate Investment Trust, or not investment trust, Brookfield Real Estate Services, guys, ticker symbol BRE. I way overpaid for these. There's so many lessons I learned from this one. Thank God I didn't buy a lot of it. But I bought into this company when it was rallying up, and I knew there was a cooling going on in Canada, and I knew it was going to come and hit it pretty hard, and sure enough, it did. BRE is essentially just 18,000 plus realtors across Canada. They just sell real estate, guys, and you make your dividends off the royalties they pay to be a part of this company. So if you want to work for Brookfield Real Estate Investment Trust, and you want, Real Estate Services, sorry, I keep saying investment trust. If you want to be a part of Brookfield Real Estate Services, guys, you have to get an education, get a license to sell real estate, and then you end up having to pay them a royalty. Not a big royalty, it's like $130 or $40, I believe, but times that by 18,000 plus realtors, and you got yourself a few $1,000,000, which completely gets paid out to the shareholder, being me. So unfortunately, with the cooling, there hasn't been a lot of real estate moving around, so Brookfield has been sitting quite stagnant and has dropped 20%-ish is where it's sitting down in my portfolio, and I own such a tiny amount. I kill myself inside because I knew I was overpaying for it when I bought it. It comes back to the same thing with this problem with my Facebook holding here, is that I get really impatient and I like putting money to work as soon as possible, because I believe I have a lot more time on my side. In the short term, getting pretty burned. This company's balance sheet looks a little rocky, but again, I don't know, it's one of my highest risk plays, I believe, in my entire portfolio, which brings me to the next one, and my favorite real estate stock currently, which is GEO. What is GEO? Well, Geo Group is the company that runs most of the prisons in the United States, guys. When it comes to real estate, when the government is paying to fill the beds, it's really nice, considering they're private companies that pay an incredible dividend, and you can make money off people going to prison, and it is an interesting version of real estate. They're not the kind of real estate you'd want to own. I mean, these prisons are usually in places nobody really wants to live anyways, but at the same time, they're getting a guaranteed rent from the government, and there's always, unfortunately, horrible people in this world that need to be dealt with, so I will make dividends off this, I believe, for the rest of my life. Let's move on to the utilities, guys. So we're going to be looking at Northland Power, first of all. Northland Power, one of my favorite companies of all time. I purchased this at an average buy price of $23, and if you look the stock up, you're going to think that's quite a lot. But I want to tell you the story about the stock, because this, when I first got into investing, was one of the first two stocks I ever bought. And I was buying this in like the $15, $16 range. And I couldn't get over when I found this company. It was everything I wanted. Natural energy, constantly expanding, deals with some of the largest wind projects on the planet. Beautifully well-ran company. I was buying it, and then it shot up to 19, and then 20, and then I realized, you know what? I should put this in my TFSA account, which was tax-free. So what I started doing was selling it off and buying it back. and I sold it off at like, I think the total was like 24 when it was reaching its high. It was like $24. So I sold out, and I was really antsy and afraid that it was going to keep going up. So the second it started dipping, I just immediately started buying back in, which was right around the 23 mark. So I felt like I got a few extra shares for free because I bought in after just selling out at a cheaper price, and it made me super happy. It makes up one of my largest positions in my entire portfolio. Really healthy dividend, the whole 9 yards. I really suggest you look this company up. It is a Canadian company as well, especially if you're one of the people in Canada, guys. And my last utility stock is My last utility, guys, Southern Company, another world-renowned U.S., of course. See, this one's a U.S. Utility stock, guys, that mainly deals with a lot of big projects, coal projects, things like that. And they're powering a few million homes, I think. Then the number, I think, is pretty staggering. I can't remember it off the top of my head. SO, I have a really good purchase price on. It's on right now about $41, $42. Don't quote me on that exactly. I got it at a really low value. I bought it on one of the big dips, and I'm really happy that I have these two utility stocks. I do want to expand a little more on SO and maybe add one more utility to my entire portfolio. But for right now, Northland Power is the largest of my utilities, and this is the second largest for that sector part of my portfolio. I love both of these companies immensely. They all pay me a really healthy dividend, which I have reinvested. It's going right back into those companies, and I plan on scaling these to rather large positions because I have a lot of faith in their dividends and their ability to grow those dividends. And if you didn't know, I think Southern Company is one of the fastest growing dividends in almost the entire utility sector, which is also really interesting to know. Let's move on to the financial sector, guys, and another favorite part of my portfolio with my 3 bank picks. They are not U.S. banks. I used to own Bank of America, but I sold it, and I never really kind of went in to buy it back because I've mainly been buying these 3 companies, and I'm going to bulk them all into one, and I will talk about them each individually. But ticker symbol BMO, Bank of Montreal, Bank of Nova Scotia, and Canadian Imperial Bank, ticker symbol CM. If you look at the track record for all of the Canadian banks, they have severely outperformed the U.S. banks, not only by capital growth, but also by dividend growth. And I picked 3 of these because they were the highest paying dividends. I personally use Scotiabank. It is how I do my trading on my TSFA. Canadian Imperial Bank, I love. It is one of the highest yielding dividend growth bank stocks in Canada. And along with Bank of Montreal, I believe has actually been the highest dividend grower. CM just starts at the highest yield, I should say. I love all of these immensely. They make up just as much of my portfolio combined as Apple and Microsoft does. Actually, they might make up a little more than those two combined. I'm going to continue to add to these positions. I do have share buybacks and drips put on these stocks. I really love our banks here, and I am going to be buying a lot more of them in the future, guys. I will always be scaling those at least for the next 5 years. I could see 3 to 5 years at least until I get them to a healthy size in my portfolio. Which leads me to the last sector of my entire portfolio, guys, the drug sector. I have made a lot of money trading Canopy Growth Corp, about $22,000. Canopy Growth Corp has been a deep love of mine in the stock market, and it is one of the reasons I've had so much capital growth and also dividend growth in this portfolio. But I don't own it anymore, but I kind of do. I actually own a Constellation Brands, ticker symbol STZ, the maker of, oh, that was a horrible Z. Oh my goodness. Sorry guys, I just screwed that up pretty bad. But Constellation Brands is a 30% holder of, they own 30% of Canopy Growth Corp. But I really don't like, again, owning companies that don't pay dividends, so I can get a dividend through Constellation Brands while also owning Canopy Growth Corp at almost nothing. If you look at what Constellation Brands is currently trading at, guys, not only would you be buying Constellation at fair value just for the alcohol part of their business, which you're going to get Modelo, you're going to get Corona. Their spirits aren't doing that well, but the company's still growing at an insane rate, and the discount that's currently trading for this company, I have an average buy price right now, I think of about 162 or 3. Really good price I think I got in at, and I think this company is going to do phantasmally well, and their dividend's still fairly new, but I think it's going to grow over time. And with Canopy behind it, even if Canopy can show a little bit of growth in that marijuana sector, it's going to come back to me as a shareholder, hopefully through dividends, so I never have to sell it. So this is my alcohol and marijuana pick. Those two combinations, I love these companies with a deep passion. I've traded them in the past. I used to own Constellations from 200 to 220. I sold out, and then I've just been buying back, and it's just another deep love of mine when it comes to stocks, which brings me to my last two, which I will bulk into one pile. They both kind of have their own little perks, and I talked about one that I actually just sold, but I own BTI, ticker symbol BTI, British American Tobacco, and I also own MO, Altria Group. So BTI, I don't think I need to explain much. They are trading at almost their base value. I think they're trading at just right around a forward PE of 2. And this company is a tobacco company with an crazy high dividend yield right now. I think it's hit its base. I don't think it's going much lower than this. So I just started buying back into it along with MO, Altria Group, another incredible stock, guys. If you don't know, Altria Group, MO, ticker symbol, has outperformed almost every stock in the entire market year after year after year. And if you go look at their capital growth, it's had a steady growth, and you'd probably think, well, I know stocks that have gone up more than that, but you don't know a stock that has had a dividend go up as much as Altria Group, guys. Their dividend growth is absolutely absurd. And if you go back and look through history, even the last decade has been absolutely absurd. So I had to add it to my list for dividend stocks, and I sold off Philip Morris. Unfortunately, I didn't sell it off when I had a high. I ended up selling it off on the dip, but luckily, the way I looked at it was at least I collected some dividends off of it. But Philip Morris doesn't have a good dividend growth. They haven't done much, and they didn't drop a whole lot either. The company's a little more stable. It's got a little less risk, but at the same time, you're not getting the growth or the dividend growth either. So it's kind of, I felt like I'd be better off buying these two smaller tobacco stocks. MO, if you don't know, Altria Group also owns a good percentage of Cron, another marijuana company, and I think it's MO that owns Juul, or it might be BTI. Both of these companies have really good dominating growth in the vapor market as well. Now, this entire bulk of stocks, guys, in my portfolio makes up 6 figures, and it is low 6 figures. It is not the high 6-figure range, guys. I am by God no means getting close to a millionaire. I am 26 years old, and to see this makes me very happy inside. I feel like I've accomplished something amazing, and it took a lot of work. It took me about 5 years to put all of this together. If I can keep a good pace going, I'm actually going to be able to hit some form of financial freedom. And again, I'm not looking, again, for huge. I know when I say financial freedom, a lot of people don't understand what that means. But I mean just to make enough passive income to essentially keep a roof over my head and food on the table. I'm never going to stop working. It's not like I'm going to retire or anything like that. I just want to show that this is possible for anybody that is willing to work hard at building a passive income source, because anybody can get rich, guys. Anybody can do this. It's just literally a very simple factor of living below your means and putting money aside. And the more you can put aside, the faster this stuff escalates. And in the beginning, I started with $500 after paying off a $22,000 loan. So it's been a fun journey, and I hope you guys are going to stick around, and I hope you are working on your own financial freedom for your future, guys. And I think we should work together as a community to help each other do this. It's only fun when we can all help each other. We can all benefit our communities, and we all can help our families just a little bit more. So stay cool, stay awesome, and I will see you tomorrow.